Here's something I say to every founder who walks into a room with me looking for capital. Show me your cost structure before you show me your revenue, because revenue is vanity. Costs are sanity. And right now in this economic environment, the businesses that are going to survive, that are going to scale, that are going to generate the kind of returns that actually matter, are the ones that have figured out how to use AI automation to restructure their cost base in ways that were completely impossible just 3 years ago. This isn't a trend, this isn't hype, this is the single most significant operational shift in the history of small and medium business. And if you're not already inside it, you're already behind. I've been building, buying, and investing in companies for over 4 decades. I've seen technology cycles come and go. I was early in software. I was early in mobile. I was early in mobile. I was early in fintech. And I can tell you with absolute certainty that what's happening right now with artificial intelligence and business automation is not comparable to any of those previous cycles. It's bigger. It's faster. And unlike most technological revolutions that primarily benefited large enterprises with massive IT budgets, this one, for the first time in my career, genuinely levels the playing field for small business operators. A 10-person company today can access AI tools that would have cost a Fortune 500 company millions of dollars to build 5 years ago. That is not a minor development. That is a fundamental restructuring of competitive advantage. So before we go any further, I want to hear from you. Drop it in the comments right now. What's the single biggest cost in your business that you feel like you have zero control over? Is it labor? Is it customer acquisition? Is it administration? Is it inventory management? Tell me exactly where the bleeding is happening, because I guarantee you, and I mean guarantee, there is an AI solution that can address it. And by the end of this, you're going to know exactly where to look. Now let me start where every serious business conversation has to start, with reality. The average small business owner in the United States spends somewhere between 40 and 60% of their revenue on labor costs. 40 to 60%. Before rent, before inventory, before marketing, before debt service, labor, and a significant portion of that labor, studies consistently suggest 30 to 40% across most industries, is spent on tasks that are repetitive, rules-based, and require no genuine human creativity or judgment. Data entry, invoice processing, appointment scheduling, customer service responses to common questions, report generation, email sorting and routing, social media posting. These are not tasks that require a human being with a salary, benefits, payroll taxes, and the full complexity of an employment relationship. These are tasks that AI automation handles faster, more accurately, and at a fraction of the cost. The math on this is not close. It's not even a debate. Let me put a specific number on it. McKinsey Global Institute published research estimating that currently demonstrable AI technology could automate approximately 45% of the activities that people are paid to perform. 45%. Not 45% of menial tasks. 45% of all paid work activities across all sectors of the economy. That number represents approximately $17 trillion in annual wages globally. When I see a number like $17 trillion, I don't see a threat. I see an opportunity. A massive, structural, once-in-a-generation opportunity for every business owner who moves first. And here's the thing about moving first. In technology adoption cycles, the early movers don't just get an incremental advantage, they get a compounding advantage. Because when you automate a cost today, you don't just save money today, you save money every single day going forward. Every month that cost isn't on your books is a month where that capital is available for growth, for product development, for market expansion, for building the kind of moat around your business that makes it genuinely defensible. The business that automates aggressively in 2024 and 2025 is going to be operating at a cost structure that its less adaptive competitors simply cannot match by 2027. That gap compounds. It doesn't close. It widens. Now I want to talk about the mindset piece first, before I get into specifics, because I've watched too many business owners approach AI automation with entirely the wrong frame of reference. And that wrong frame of reference causes them to either ignore it entirely or implement it in ways that are so timid and incremental that they get none of the real benefit. The wrong way to think about AI automation is as a tool to make your existing processes slightly more efficient. That is a small, defensive, incremental mindset, and it will produce small, defensive, incremental results. The right way to think about AI automation is as an opportunity to completely redesign how your business operates from the ground up, to ask not, how can AI help me do what I'm already doing, but if I were building this business from scratch today, knowing what AI can do, how would I structure it? That's the question that unlocks the real value. The businesses that are winning right now, the ones I'm seeing in my portfolio and in the companies I evaluate, are not the ones that added a chatbot to their website. They're the ones that fundamentally reimagined their workflows with AI as a central design principle rather than an afterthought. They're the ones where the question, does a human need to do this, is asked about every single process before any labor is hired. And the default answer to that question, increasingly, is no. A human doesn't need to do this. An AI system can do this better, faster, and for approximately 1/10 of the cost. That shift in default thinking is worth more than any specific tool I could recommend. Because tools change. The specific AI platforms available today will look primitive compared to what's available in 3 years. But the discipline of questioning every human labor cost in your business, that's a permanent competitive advantage. That's a new way of seeing your business that once you develop, you can't unsee. And it will make you money for as long as you're running a company. Let me contrast two businesses for you. I do this because concrete comparison is more instructive than abstract principle. Business A is a mid-size e-commerce company doing $5 million a year in revenue. The owner is smart, hardworking, has been in business for 8 years. Their customer service team is 6 people handling inquiries, returns, and complaints across email and chat. Their operations team is 3 people handling order processing, inventory management, and vendor communications. Their marketing team is 2 people managing social media, email campaigns, and basic content creation. That's 11 people in roles that are almost entirely automatable with current AI technology. At average fully loaded labor costs, salary plus benefits plus payroll taxes plus management overhead, that's probably $1.2 to $1.5 million annually. On $5 million in revenue, that's 24 to 30% of revenue on labor that doesn't need to be human. Business B is also doing $5 million a year in revenue in the same category, but this owner started 2 years ago with AI automation as a design principle. Their customer service is handled by an AI system trained on their product catalog, return policy, and thousands of previous customer interactions. It resolves approximately 85% of all inquiries without human intervention. The 15% that require human judgment routes to one part-time customer service specialist. Their order processing and inventory management are fully automated through integrated AI systems that communicate directly with their fulfillment partners and vendors. Their marketing content, product descriptions, email campaigns, social posts is generated by AI with human review and editing. Their total headcount in these functions, 2 people, 1 part-time. Labor cost in these functions approximately $140,000 annually versus $1.2 to $1.5 million. Same revenue, same customer experience, arguably better because the AI system is available 24 hours a day and never has a bad day. Completely different cost structure. That difference, $1.1 million or more in annual savings at a $5 million revenue business, is transformative. It's the difference between a business that's barely profitable and one that's generating 22% net margins. It's the difference between a business that's constantly stressed about cash flow and one that's accumulating capital for growth. It's the difference between a business that's vulnerable to any economic downturn and one that's structurally resilient because its fixed cost base is dramatically lower than its revenue base. Now let's get specific, because specificity is where the real value is. The first category of AI automation that every business owner needs to implement immediately is customer communication. This is the area with the fastest, most measurable ROI, and it's where most businesses have the most unnecessary labor concentrated. Modern AI customer service systems, and there are multiple excellent options at every price point, can handle the full spectrum of customer inquiries with accuracy rates that consistently exceed human performance on defined tasks. I'm not talking about the frustrating limited chatbots of 5 years ago. I'm talking about systems trained on your specific business context that can understand nuanced questions, provide accurate product information, process returns, check order status, handle complaints with genuine empathy in the response tone, and escalate to a human being with full context when a situation genuinely requires judgment. The implementation timeline for a quality AI customer service system is typically 2 to 6 weeks. The cost is typically between $50 and $500 per month, depending on volume and capability. The labor cost it replaces is typically between $80,000 and $300,000 annually per business. The ROI calculation here is not complicated. It's embarrassingly obvious. And yet the majority of small and medium business owners haven't done it. They have a customer service team that's emailing back and forth with people asking, "Where's my order at $60,000 a year per head?" When an AI system could answer that question at scale for a few $100s a month. The second category is document and data processing. I cannot emphasize enough how much time and money small businesses waste on the manual handling of structured data, invoice processing, purchase order management, contract review at a basic level, expense reporting, payroll data preparation. These are all processes where information moves from one format to another through human hands, and where errors occur, delays accumulate, and labor costs stack up unnecessarily. AI automation and document processing has reached a level of maturity and accuracy that makes it immediately deployable for most business use cases. Tools built on modern AI can extract data from invoices, categorize it correctly, flag anomalies, route for approval, and integrate with accounting systems without a human being touching it. The accuracy rates are typically higher than manual processing because AI doesn't get tired, doesn't get distracted, and doesn't skip steps on a Friday afternoon. For a business processing even 100 invoices a month, the time savings are immediate and significant. For a business processing thousands, the dollar savings are transformative. I've seen portfolio companies reduce their accounts payable processing costs by over 70% through AI automation in this area alone. 70%. That's not a rounding error. That's a meaningful restructuring of the cost base from a single implementation in a single department. The third category is marketing and content creation. And this is one where I've seen the most dramatic shift in capability over the past 18 months specifically. Modern AI systems can now produce marketing copy, email sequences, social media content, product descriptions, blog posts, video scripts, and advertising creative at a quality level that was simply not achievable 2 years ago. I'm not saying AI replaces creative strategy. It absolutely does not. Human creative direction, brand judgment, and strategic thinking remain essential. But the execution layer, the actual production of content, that's where the labor cost in marketing has traditionally been concentrated. And that's exactly where AI automation delivers the most immediate savings. A marketing team that used to require 3 or 4 people to maintain a consistent content output across multiple channels can now, with the right AI toolkit, be managed by one person with strong strategic instincts and editorial judgment. The AI handles production, the human handles direction and quality control. The output can actually increase, more content, more channels, more frequency, while the labor cost decreases significantly. This is not theoretical. I'm watching it happen in real time across multiple companies. And the businesses that figure this out first are building a content and marketing scale advantage that their labor-heavy competitors simply cannot match at the same cost. The fourth category, and this is the one that most people underestimate, is business intelligence and decision support. Every business generates data. Most businesses capture almost none of its value. The information sitting in your CRM, your inventory system, your financial software, your customer communication history, your website analytics, that data, properly analyzed, contains actionable insights that could materially improve your pricing decisions, your inventory management, your customer retention strategy, your marketing allocation, your hiring timing. But extracting those insights manually takes analyst time that most small businesses don't have and can't afford. AI business intelligence tools have made this kind of analysis accessible at a cost point that's completely viable for businesses doing $500,000 a year, never mind $5 million. Systems that automatically identify your highest margin products and flag when inventory positioning doesn't reflect that reality. Systems that analyze customer behavior patterns to predict churn before it happens and trigger retention interventions. Systems that monitor your pricing against competitive data in real time and recommend adjustments. These are not luxury capabilities for large enterprises anymore. These are tools that are available, affordable, and deployable today for businesses of almost any size, and the decisions they enable are worth significantly more than the cost of implementing them. Now I want to address the objection I hear constantly from business owners who are resisting AI automation. And the objection usually sounds like one of 3 things. My customers want to talk to a real person, or my business is too unique for AI to understand, or I'm worried about the quality. Let me deal with each of these directly, because they're all variations of the same fundamental misunderstanding. On the customer experience objection, the data does not support the premise. Multiple large-scale studies across e-commerce, financial services, and hospitality have consistently shown that customers don't particularly want to talk to a human. They want their problems solved quickly and accurately. When AI systems resolve issues faster than human teams, customer satisfaction scores go up, not down. The preference for human interaction is context-specific. In high-stakes, emotionally complex situations, human empathy is genuinely valuable and worth preserving. In the vast majority of routine business interactions, customers want speed and accuracy over a human voice. Designing your automation to handle routine interactions automatically while preserving human engagement for genuinely complex situations is not a compromise, it's an optimization. On the "my business is too unique" objection, every business owner thinks their business is uniquely complex. Almost none of them are right. The specific products are different. The brand voice is different. The customer demographic is different. But the operational processes, the communication flows, the document handling, the data processing, the marketing production, these are structurally similar across almost every business category. Modern AI systems are trained to adapt to specific business contexts. They learn your product catalog, they learn your tone, they learn your policies. The "my business is different" objection is almost always a rationalization for change. Avoidance, dressed up as operational nuance. On the quality objection, quality concerns were legitimate 18 months ago. They are significantly less legitimate today, and they will be almost entirely obsolete 12 months from now. The pace of improvement in AI capabilities is not linear, it's exponential. Tools that produced mediocre outputs in 2022 produce professional quality outputs today. Tools that produce professional outputs today will produce outputs that are indistinguishable from expert human work by 2026. If you're waiting for AI quality to be good enough before you implement, you've already passed the threshold in most business categories. The standard being applied to AI output is almost always stricter than the standard being applied to the human output it's replacing. Your customer service reps' emails have typos. Your AI systems don't. Let me talk about implementation because the how matters as much as the what. I've watched companies spend money on AI tools and get essentially no return, not because the tools don't work, but because the implementation was chaotic, unfocused, and lacked clear success metrics. Here's the disciplined approach. Start with one process. 1. Don't try to automate everything simultaneously. Pick the single highest cost, most repetitive process in your business. The one where the labor cost is clearest and the task definition is most structured. Automate that process completely. Run it in parallel with your existing process for 30 days to validate output quality. Measure the results. Calculate the actual savings. Document what worked and what needed adjustment. Then use that experience, that data, and that confidence to move to the next process. This is not timidity. This is how you build organizational competence in AI implementation. The businesses that try to do everything at once almost universally end up with a half-implemented mess that doesn't deliver on any of its promises. The businesses that go deep on one process, get it right, measure the results, and then expand systematically. Those are the ones that build sustainable AI-driven cost advantages. When choosing where to start, use 3 criteria. Volume. How many times does this process happen per week or month? Repetitiveness. How rule-based and structured is it? Cost. What's the fully loaded labor cost of this process currently? The process that scores highest across these 3 criteria is your starting point. In most businesses, that's going to be customer communication or invoice processing. In some, it'll be data entry. In others, it'll be marketing content production. The specifics vary. The analytical framework doesn't. Set explicit, measurable success metrics before you start. Not vague goals like reduce customer service costs. Specific metrics. Cost per resolved inquiry. Average resolution time, customer satisfaction score on automated interactions, accuracy rate of document processing. These metrics give you an honest picture of performance and tell you when the automation is ready to operate without parallel human backup. They also give you the data to make the business case for expanding automation to the next process. Now let me address the people dimension, because this is the conversation that makes most business owners uncomfortable and that they consequently avoid. AI automation replaces human labor. That is not a side effect, it's the primary mechanism of the cost reduction. And pretending otherwise, framing automation as a tool that frees up your team to do higher value work without acknowledging that in many cases it fundamentally reduces the headcount requirements of the business is not honesty. It's corporate speak. And I don't do corporate speak. Here's my position on this, and it's a position I hold without apology. A business exists to generate returns for its owners and to serve its customers. It does not exist to provide employment. Employment is a consequence of business activity, not the purpose of it. When automation allows you to deliver the same or better customer experience at a significantly lower cost, Implementing that automation is the right business decision. Full stop. The displaced labor doesn't disappear from the economy. It reallocates. New categories of work emerge. New skills become valuable. This is how every major technological shift in history has worked, from mechanized agriculture to industrial manufacturing to computerized accounting. The economy adapts. Workers adapt. The businesses that adapt fastest win. What I will say is this: if you have people in your organization who are genuinely capable of higher value contributions, people who have customer relationships, product intuition, creative abilities, judgment, give them the opportunity to grow into those roles as automation handles the routine work. Some will step up, some won't, but make the offer genuine and invest in the transition, because the human capabilities that AI genuinely cannot replicate, complex problem solving in novel situations, authentic relationship building, creative direction, ethical judgment, those are increasingly valuable in a world where routine cognitive labor is automated. If you have people with those capabilities, they're worth developing and retaining. If you don't, you need to be honest with yourself about what that means for your headcount structure. I want to talk about the financial model of AI automation investment because it reframes the decision in a way that makes the choice completely obvious to anyone who can read a P&L. AI automation tools are almost universally priced on a subscription model, monthly recurring costs. This means the investment is fully expensed, not capitalized. It comes directly off your operating costs. The savings it generates come directly to the bottom line. The ROI timeline is almost always under 6 months. In many cases, it's under 60 days. Show me another business investment, any investment in equipment, in marketing, in real estate, in talent, that consistently delivers a 6-month or better payback period and continues to generate returns every single month going forward. It doesn't exist. This is the most efficient use of business capital I have seen in my career. And I've evaluated thousands of businesses and hundreds of investment categories. Let me put it in terms that every P&L-focused owner will understand. If you spend $2,000 a month on AI automation tools that replace $30,000 a month in labor costs, you've created a $28,000 monthly improvement in your operating profit. Annualized, that's $336,000 in additional annual profit from a $24,000 annual investment. In what world does a business owner not make that trade? In what financial model does that calculation not work? The answer is, it always works. The only reason not to make it is inertia, fear of change, or ignorance of what's actually available. And the compounding effect is what really makes this extraordinary. That additional $336,000 in annual profit, what do you do with it? You invest it in better products, in marketing that acquires customers at lower cost, in technology that creates further operational leverage, in building inventory for a category expansion, in paying down debt that's costing you interest. Every dollar you save on labor through automation is a dollar that compounds forward into the business's future value. Every dollar you don't save is a dollar that has disappeared from your compounding equation permanently. Let me address one more thing that doesn't get talked about enough: AI automation and business valuation. If you ever intend to sell your business, and every business owner should be building toward an exit, whether they take it or not, your cost structure is one of the most significant determinants of your valuation multiple. Businesses with low fixed costs and high margins command significantly better multiples than businesses with bloated headcount and thin margins, even at the same revenue level. A business generating $1 million in EBITDA with automated operations and a lean team will receive a higher multiple from a strategic or financial buyer than a business generating the same EBITDA with 20 employees and heavy operational dependency on those employees. Why? Because the buyer is acquiring future cash flows. A cost structure dependent on individual employees is fragile and difficult to scale. A cost structure anchored in AI automation is scalable, predictable, and transferable. It de-risks the acquisition. And de-risked acquisitions command premium multiples. I have personally seen businesses add 1 to 3 turns of EBITDA multiple to their exit valuation simply by demonstrating a lean, AI automated operational model before going to market. On a business with $2 million in EBITDA, 1 turn of additional multiple is worth $2 million in additional exit proceeds. 3 turns is worth $6 million. That's not theoretical upside. That's real money that belongs to you and doesn't belong to you right now because your cost structure tells the wrong story to potential buyers. Start building the right story now, not when you're about to sell. Now, Because operational transformation takes time to fully embed in your financial statements, and buyers want to see a consistent track record, not a recent renovation. The time to implement AI automation for valuation purposes is at least 2 to 3 years before your intended exit. If you're not thinking about your exit multiple today, you're leaving money on the table that you earned. Let me bring this back to the fundamental point, because I want it to land clearly. We are living through the most significant shift in business cost economics since the invention of the personal computer. AI automation is not a future possibility. It's a present reality that is actively restructuring competitive dynamics across every industry. The businesses that implement it now are building cost advantages that compound. The businesses that delay are watching their competitive position erode. The gap between the early adopters and the late adopters in this cycle will be wider, faster, and more permanent than in any previous technology cycle. Because this one touches the single largest cost in most businesses, human labor, and the improvement it delivers is not incremental, it's structural. I built my career on one principle: find the structural advantage and move before the crowd does. In the 90s, that was software as a business infrastructure. In the 2000s, that was mobile commerce. In the 2010s, that was data analytics and the platform economy. Right now, in this moment, the structural advantage is AI automation applied to business costs. The crowd is still debating whether it's real. The winners are already implementing. Don't be the person who looks back in 3 years and says, "I knew about this and I didn't move." That is the most expensive form of hesitation in business. Not the mistakes you make, the moves you didn't make, the opportunities you saw clearly and didn't take because change is uncomfortable and the status quo feels safe right now. The status quo is never safe. The status quo is just a slowly building disadvantage that you don't feel until it's too late to address without crisis. Move now. Start with one process. Measure the results, then move to the next one. Build the muscle for AI-driven operational thinking. Make it the default lens through which you evaluate every cost in your business. Ask the question every single time, does a human need to do this? And when the answer is no, and it will increasingly be no, have the courage to act on that answer. Your competitors might not be moving yet, but some of them are, and the ones who are moving aren't going to stop. They're going to keep automating, keep compounding the advantage, keep widening the gap. The window to be in the first wave of this transformation is not indefinitely open. First mover advantages erode as adoption becomes widespread. But right now, in this specific moment, there is still enormous competitive advantage available to the business owner who moves with conviction and speed. That's the opportunity, that's the mandate, and now you have no excuse for not seeing it clearly. If this gave you a concrete, actionable perspective on AI automation and what it can actually do for your business costs, hit that like button and subscribe, because I cover this kind of analysis regularly, and the next one is going to go even deeper. And right now, before you do anything else, drop in the comments, what's the first process in your business you're going to automate? I'm going to read them. I might even respond, because if you're serious enough to answer that question, you're already ahead of 90% of the people watching this. Let's get to work.